All right. What's up, tycoons? What is up, traders? Super excited for today's video. We're going to be looking at Energy Web Token. All right. EWT is the ticker symbol. This one was a viewer request, breaking it down on the daily chart for you guys. So currently, we're going to go over the major retracement levels, right? The 61.8, the 50%, and the 38.2. You must hold or break through these levels to either get a continuation of the trend or a reversal, okay? So nothing moves in a straight line up, nothing moves in a straight line down. What you get is a move up, retracement, and then a continuation upwards, or you get a move down, retracement, and continuation downwards, right? As soon as you break through your major retracement levels, that's when you can look for a reversal. So I'm going to break that down for you guys. We're also going to look at the MACD and how you can use the MACD to spot possible entries and exits, as well as the relative strength index. And you can use this as well to find divergences. Once you find a bearish or a bullish divergence, that can help you, determine some of the future activity, whether it's going to be bearish or bullish. So you're going to learn a lot in this video. Make sure to smash this like button and subscribe to the channel if you guys are new, and we'll go ahead and jump straight into it. So if we zoom in right now, there's a few things that we are looking at, okay? We have our major retracement levels to the upside. That's going to be these three yellow lines right here, all right? And I have these in yellow because this is your area of caution. You want to be cautious at. Now, we do have an inverse cup and handle pattern forming right here. As you can see, we have our inverse cup. We're getting a little bit of bounce, and this could be forming the handle. So you do need to be a little bit cautious, but this pattern is not guaranteed to play out, right? This is a bearish pattern. And if you break down below here, you would expect to move downwards, right? Now we can cross out of this and we can negate this pattern, but it's good to have an idea and format of some of the levels that we're watching, okay? So what we're seeing now is we have this sharp move to the downside, and then we're retracing, okay? So we could come as high as 3.977. We have 3.75 and 3.528 as well. Those are our three major retracement levels. So if we come down, bounce up to these levels, it's going to be very important to see what we do next. Do we consolidate, drop, and break through, right? If we break through, then we could get a reversal. We have a high here, and we could try to establish a higher high up here. If not, if we come to these levels and bounce and get rejected, then most likely we're going to continue this downtrend that was just a healthy retracement and head back lower. So you need to be really, cautious and pay a lot of attention to these levels. All right, now on the bullish side, if we negate out this inverse cup and handle pattern that we have forming, right, and we come through here and we break through our major retracement levels, and instead of resistance, we flip them to support, then we have really our major breakout level to create a new high is going to be 4.7. All right, if we get past 4.7, that's our previous high. You see we're making high and lower highs, right? We'd have to, start making a high and then a higher high. So 4.7 is going to be the real critical area to test and see, are we going to be able to break past this and create higher highs? If we do, we have some bullish price targets up here of 5.22, 5.49, and 5.88. All right. And even if we get past 5.88, there's a possibility we could go as high as 7.783. Now, I wouldn't expect that to happen anytime soon. There's lots and lots of work to be done. Most notably, again, the major retracement levels, okay? So if we do happen to get rejected around here and continue heading lower, 2.81 is going to be your breakout level to the downside. We've held this level once, twice. We've gotten two bounces on it. If we flip this level from an area of support to an area of resistance and we break below it, we have price targets of 2.65, 2.57, and 2.45. Those are going to be your three main support levels down here in case we do end up breaking down. Now, if we end up breaking down past 2.45, we could go as low as 1.86. So that's really the bearish and bullish case. And what we're going to do is we're going to zoom out a little bit now and really break down the entire history of the chart and just show you guys how, these different strategies work and how you can start to combine chart patterns, divergences, and things like that to give yourself a really good edge in the market. Trading cryptocurrency is like going to battle. It's like going to war. And you need to have as many weapons, the proper weapons, and know how to use those weapons to increase your odds of success on the battlefield. So what we're going to do is we're going to take a look at a few of those weapons right here. All right. So the first one we have is going to be a chart pattern, right? So we have a rising wedge here indicated by this trend line. We're heading upwards, okay, and we're zigzagging in between here. This is a bearish chart pattern, and if you break below this trend line right here, you can expect to see a large move to the downside. Now, using 2 or 3 weapons together, right? Strategies, that's going to help give you a better edge and give yourself more confidence, right? Because no one strategy is guaranteed to work 100% of the time. If it was, everybody would be trillionaires. We'd all be rich trading crypto and stock and foreign exchange. But when you have 2 or more things aligning together, that's when you can really have some stronger confidence in your play. So what I mean by that is, take a look here. We have the bearish chart pattern. We're looking to see if we're going to get that breakdown. Now, if we look at our MACD down here, you can see we get a MACD exit signal. So what that's going to be is this red line here. You want to pay attention to that. When it crosses below the white line, that's going to be your MACD sell signal. And you see, we break the trend line right here, and we also get a MACD sell signal, and we get a very sharp move to the downside. Now, from there, we got some entry signals, okay? So take a look here at these circles. We have a low, and then we have a lower low. So the token is clearly in a downtrend, and it's going lower in price. But our relative strength index, which measures the relative strength of a token at its given price, it should correlate to what the price of the token is doing. When it does not, we have a divergence. So in this case, as I said, we have a low and a lower low, right? Well, here we have a low, and we have a slightly higher low, right? It's almost flat even, but we have a slightly higher low. So what that means is we have a slight bullish divergence, because we're actually not losing strength, and we're actually gaining a small amount of strength as this token has lost value and gone lower in price. That's a term known as bullish divergence. It indicates you could get some bullish activity. All right, so that's number one. And number two, what do we see? We get a MACD entry signal. So the opposite of the exit signal, where the red line crosses below the white line, right here we see the red line crosses above the white line. So the red line crosses above the white line right here. That's our MACD entry signal. We also had a slight bullish divergence. So now we have two things together telling us, hey, we could get some bullish activity in the future, and we go on a very, very nice rally. Now over here, what we're looking at is our fib retracement levels. So remember I said the 38.2, 50%, and 61.8 are the most important retracement levels. Nothing's going to move straight up, and nothing's going to move straight down. It's going to go up, retrace, and then continue that move higher. Unless we break through the retracement levels, that's when we'll get a reversal. So what we've done is we've taken our new swing low, connected it to the new swing high up here, and it gives us 3 major support levels to hold for us to continue going higher. If we break through these levels, then we can expect some type of a reversal or move back to the downside. But what we do is we come up, we retrace, and we hold support exactly at our 61.8 retracement level about 4 or 5 times, right? 4 or 5 wicks right here, right at our major level. And then what do we see? We see a MACD entry signal again. So we get the red line crossing above the white line. So now we have one thing, we're holding our major retracement levels. 2, we have the MACD buy signal right here. And as you can see, we get another sharp move up to the upside. Now, shortly afterwards, we end up forming that ascending wedge, that rising wedge pattern again, right? And sure enough, it's a bearish chart pattern, and you can expect a move to the downside. Well, what do we see here? What are we getting? And what are we looking at really? We're looking at a few things, okay? So this time, instead of a bullish divergence, we're actually going to be looking at a bearish divergence. So notice how we have a high here. We come over here and create a higher high, right? Over here, we create a higher high. Both of these highs, all right, are higher than this high over here, all right? Now, if we take a look at the relative strength index, we have a high, we have a lower high, and we have a lower high again at those 3 exact points. So the token is going up in price. We're creating higher values, higher highs, but the relative strength index is making lower highs. This is a bearish divergence, indicating we're going to have some bearish activity in the future, right? So we have bearish divergence going. We also have this bearish chart pattern here, the rising wedge, looking for a break, right, of this trend line. And a lot of times you see a break and a retest, okay? So we break, we break our trend line. We get the MACD sell signal, and, you know, ultimately this thing ends up falling very dramatically, right? So we're combining a lot of different strategies, combining a lot of our weapons to help give us a better edge in the market and look for a true, you know, some true signals, right? Over here, we can see we have some bullish divergence again, right? If we zoom in on the RSI at the bottom, right, we can see that the token is making a low, lower low. We have a low here, we have a higher low here. So we're getting some bullish divergence, right? Now over here is when we got the first MACD buy signal, right? So we see the MACD buy signal, we do get a short pop, and then look what it does. We end up trending back down lower. So, using only one of these strategies isn't going to work 100% of the time, but you can increase your odds of success by combining multiple, right? So here we get the original MACD buy signal. Over here, we make a higher low on the relative strength index after making a lower low on the actual token itself. So now here's our second signal, and look at the very nice massive rally that we do right there. Now, it's important to note that look at where we get rejected, right? So if we take our swing high, our previous swing high, and connect it to our new low, which is what we've done right here, look at where we get rejected, right at the 61.8% retracement level, right? So we have this big move to the downside. We retrace up, and now it's a time to be cautious, right? Because we know we have our three major retracement levels here in yellow, and if we can't break out past these, then we're not going to be able, to have a potential of making a high here and then a higher high and getting that reversal. So what do we see? We come down, we retrace, we get rejected here. So this is a good area for you to start using some stop losses, right? When you're in your major retracement levels. Now what do we see here? We have a couple more patterns. All right, we have a bear flag. So a bear flag is going to be indicated by this sharp move to the downside. That's your flag pole. Then you get the flag itself is going to be this consolidation channel. Once you break this trend line here to the bottom, you can expect another sharp move to the downside, roughly the length of your actual flag pole, right? So that's a bearish chart pattern. That's another pattern you guys can learn. Shortly afterwards, we actually make a double bottom and get a nice W pattern right here. Okay, there's a very nice move, a very nice W pattern. So here's our first signal, right? We're getting a chart pattern. We're seeing a double bottom right here. And then if we look at the relative strength index, we see we have a low, we have a higher low. So now we've created a bullish divergence when, this was flat. So this stayed flat, created a low and then an equal low right over here. And then we made a low and a higher low. So we're building relative strength. We're building a bullish divergence. We get the red line crossing above the MACD right here. So now we have three things telling us that we could get a nice move back up to the upside. And that W pattern ends up playing out. We hit that W pattern very nicely, hit the targets on it, and we even push up a little bit higher, right? If we come over here, what do we see? We're seeing another bear flag pattern, okay? So we have our bear flag right here, flag pole. We have consolidation channel. We break below this channel. We get a sharp move to the downside. Over here, what are we doing? We end up building some bullish divergence. Okay. So we have a low. Let me zoom in on the chart just a little bit more for you guys. All right. So we have a low and then a lower low right over here. Okay. Token clearly in a downtrend. Relative strength index has a low and a higher low, clearly in an uptrend. So now we're building some bullish divergence. We get the MACD crossover right here. Red line crosses above the white line right here. Okay, so now we have a MACD buy signal and we have relative strength index bullish divergence. And you see we get a nice little move up to the upside. Now what happens after that? We end up forming in that process of rallying, we form a head and shoulders, right? So if you're unfamiliar with the head and shoulders, you're going to look for a left shoulder, you're going to look for a head, you're going to look for a right shoulder. This is a bearish pattern. As we see this forming, we end up, all right, if we take a look at our MACD, okay, and zoom in a little bit more on it, what do we get when we make our right shoulder? We get a MACD sell signal. So over here, we've established we have a right shoulder now. After looking for the left shoulder head, we established we have a right shoulder, and right afterwards here, we get a MACD sell signal, and we see a sharp move to the downside. So, a lot of these things may sound repetitive, but the more you process these, the more you practice these, the more screen time you have, that's what's really going to help you out and help you spot some of these things. And it's not too hard, okay? This may seem overwhelming, but all we're doing is looking for lower lows, higher lows, and then comparing that to the relative strength index. If it has the same lower lows or higher lows and lower lows, what it's doing there, if there's any divergences. And then we're using the Fibonacci retracement levels, okay? 3 simple levels. And we're taking a look at the MACD and we're looking to see, are we getting a crossover below the white line or a crossover above the white line? So in time, you can, get better and better at these, and it will become easier with more screen time. So just reiterating some of the same things, we see we have a low, we have a lower low, we have a low, we have a much higher low right here, and we've been holding this relative strength index. Now look at the degree and the slope of this bullish divergence right here. This is a much stronger bullish divergence than some of the ones that we looked at where it was almost flat or just barely a little bit higher. All right, that ended up leading into a nice rally, a nice move to the upside. So you can see there was a very strong push up. Okay. And then we end up getting some bearish divergence, right? And again, a bearish divergence is when you're making a high, right? And then a higher high right here. You see we're doing that. Clearly, we're in an uptrend. The relative strength index, however, is making a high and a lower high, and it's in a downtrend. So we have bearish divergence, and then right here, we get a MACD sell signal. Red line crosses below the white line. And what do we get? We get a sharp move to the downside. So all of that brings us back into summary to what we're looking at right now. We have a current bearish chart pattern on our chart. We have the inverse cup and handle. This is a cup. We're forming a handle right here. We could break out of this by coming up to our major retracement levels, right? So if we break out and come up to our major retracement levels, we could end up breaking through those and getting a reversal. All right. So that's really what we're going to look out for. If you're bullish, you're going to look to see if we come up and we can break past 3.97. If we can do that, we have our major breakout level of 4.704. Right. Once we break out past there, we've made a high and then a higher high, and we've started a little bit of an uptrend that could take us up higher to our bullish price targets I gave in the beginning of the video. Now, if we don't get that, or let's say we come up to these levels and we end up getting rejected somewhere, most likely we're going to continue the downtrend. So you want to pay close attention to 2.812. That's our major support level to the downside. If we break below there, there's a possibility we could come down to 2.65, 2.57, and then 2.45. So that's it for today's video. Appreciate y'all watching. Smash the like button, subscribe to the channel, and I'm out.